Hello everyone, George DeSantis here with the look at the market for the week ending January 28th, 2017. Let's begin by reading the disclaimer first of all. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. Consult a licensed professional investment advisor for investment advice because I am not an investment advisor. Let's take a look at the monthly chart first of all, as we always do, of the S&P. And here's the monthly chart of the S&P 500 we usually look at. First of all, we can notice that this trend is really very strong. The Kalman filter, this yellow line, is above the blue line, the instantaneous trend line, and therefore it's indicating to us that the trend is up. That's the longer term trend. So the other thing is to notice that the market closed pretty close to its high for the month so far. So that's also very bullish. The parabolic yellow dot is still below the most recent bar. MACD histogram is trending up. We can see that the fast average crossed above the slow average here. And at the bottom of the chart, our friend Alex Elder's Elder Force Index has broken this downtrend line here and is now continuing to trend up. So all in all, the longer term trend is up. And let's take a look at the weekly chart. And here's a weekly chart of the S&P 500. On Tuesday, I did a video and I mentioned that there was a concern that we had here, the divergence of MACD from the S&P's, the price of the S&P market. So we could see that divergence here. It wasn't very significant because this histogram wasn't very much lower than this one. However, it's reason to be concerned. And since then, for the rest of the week, we found that the S&P broke above this triangle here and closed higher. So we're at new highs now at 2294.69. In the middle of the chart, we see percent R maintaining that very high level here above the 80% line, which tells us the momentum of this move is very strong. As far as RSI 12 is concerned, and it's most effective on a weekly chart, we see that it continues to remain above the 60% line, which confirms the uptrend. And at the bottom of the chart, MACD, although we had that minor divergence, continues to be above the zero line and the fast average above the slow average. So the bulls are still in charge. Let's take a look at the daily chart. And here's a daily chart of the S&P 500. What we see here is that last week I pointed out, or at least on Tuesday, that we had a squeeze here. See how the Bollinger Bands became very narrow, very close to each other. And usually when you have this sort of squeeze, the market experiences more of a volatile move, either up or down. Can't tell which direction it'll go, usually, but we had this upswing here. So at this time, we have, on Thursday and Friday, we had two dojis, or very small bodied bars, candles. And it's not unusual for this to happen after a big gap up like this. So on Wednesday, we had this big gap up, and then we are consolidating here again. Parabolic is below the most recent bar, so there's no indication to reverse this uptrend. It's very strong. Kalman filter, the yellow line, is above the instantaneous trend line, and that's one of the measures of a trend. And when it's above the instantaneous trend line, we have an uptrend. In the middle of the chart here, Jerry Appel's sum of the rate of change indicator is oscillating above the 4% line, so no direction there for making a trade off of this indicator. MACD, on the other hand, just turned positive, so the bulls are in charge here once more, above the zero line, MACD. You can see the fast average crossed above the slow average. It's been below all the way back here into December of last year. And at the bottom of the chart, percent R is continuing to remain above the 80% line. So the daily chart is also looking very bullish on the S&P. We have the monthly chart looking very bullish, the weekly chart very bullish, the daily chart very bullish. No reason to doubt this uptrend here. Yes, there are there will always be some question marks, and one can find some divergences here and there, but the general trend is up on all three time frames. Let's look at the NASDAQ. Here's the weekly chart of the NASDAQ composite, and some time ago when this triangle, ABCD triangle, developed, I calculated a target of 56.54. You can see it was, you take A minus B and you add that difference to C. And so the target was 56.54. We've hit that. We are now closing at 56.60. So we hit that target. But this is a very bullish engulfing candlestick. It totally engulfs the body of this candle. So that's very bullish. The parabolic is below the most recent bar. And of course, Kalman filter, yellow line, remains above the instantaneous trend line, the blue line. So this NASDAQ is also looking very bullish. RSI 12 is indicating that this trend is in place. The uptrend is significantly in place, to put it that way. It's above the 60% line. And MACD, although we had a bearish divergence of MACD at this point in time, MACD is reversing. It's now trending up. So this divergence here on the NASDAQ never really materialized, at least so far, in a correction or pullback. And MACD is beginning to look strong again, trending up. So the NASDAQ, the weekly chart, is also looking very bullish. Let's take a look at the daily chart. Here's the daily chart of the NASDAQ composite. And of course, the first thing we look at is the Kalman filter, that yellow line above the instantaneous trend line, indicating trend is well in place, is up. We had that same kind of a gap that we saw on the S&P, this gap up, and then it's consolidated for a couple of days on Thursday and Friday after this big move up. So we now have another doji, and we may see a little bit of a pullback here, but all in all, this trend is up significantly. Jerry Appel, sum of the rate of change indicator that I used to trade the NASDAQ with, is still on this bullish signal here. So I haven't sold it yet. I usually buy one of the Qs, etc. To play this. The MACD indicator is trending up from below the zero line. It's now above zero. It's at 7.85. So that's confirming the strength of that uptrend. And at the bottom of the chart, the Elder Force Index is way above the zero line. So everything, all cylinders are firing. These are all uptrends, all the different time frames on the NASDAQ and the S&P. Let's take a look at a few other things. We'll take a look at a few charts at stockcharts.com, and the first one here is a daily chart of the new high, new low index. It's a 5-day average of the new high, new low index, and we can see that it's trending up again. So that's encouraging from a bullish standpoint. Take a look at another one. And this is a chart, a weekly chart of the S&P 500 showing Alex Elder's impulse indicator with the bars painted red, green, and blue. And we can see on the right side of the screen, we have a green bar now on the weekly chart, which says systems are go. We can buy. We're permitted to buy the market in general. And of course, if you look at individual stocks and they have the same green bar on the weekly chart, same interpretation. You're allowed to buy. Let's take a look at the daily chart and see what that looks like. Now, on the daily chart, there's reason for some concern here because we have green bars in the last few days, in the last 3 days of the week. However, when you look at MACD is really showing us a bearish divergence. Unless we get MACD trending up higher here, this is some reason to be concerned that this market might go through a pullback soon. So we'll keep that in mind. Let's take a look at, and here's a chart of the percentage of the S&P 100, percentage of those stocks above their 200-day moving average. And right now it sits at 74%, and it's above both the 50 and the 200-day moving average. So that's still looking pretty strong. Number of stocks above the 200-day moving average. Well, all in all, the markets looks very strong. I don't usually mention individual stocks on the video. I'll send you an email with my thinking of a few stocks that I own, etc. But right now, this market is looking very strong. There are a few indications of possible pullback, like the divergence on the daily chart of the S&P. But all in all, it's go. All systems on go. Talk to you again next week.